Hello, Dale McDermott here with the CGLCC and welcome to the 2020 Digital LGBT Plus Global Business Summit. Before we get started on the session, CGLCC would like to recognise our presenting sponsor, TD Bank Group, along with all of our gold and silver sponsors and all of our sponsors for helping us to make this event happen. We would also like to recognise our translation partner, AI Media, for enabling us to deliver live caption translation in 3 languages, English, French and Spanish, and you can access those using the links below in the description box. I'd also like to draw your attention to the left-hand side of your screen to the networking and exhibit hall tabs, where over the course of the next 5 days you can connect with LGBT plus businesses, corporations and each other to help drive that power of connection. And finally, if you do like the content we are producing, please feel free to make a financial contribution using the donate link in the description box below. Thank you and enjoy your session.
Good afternoon, everyone. My name is Jeet Dillon, and I am Vice President and Senior Portfolio Manager with TD Wealth. It is my pleasure to participate in this year's CGLCC Virtual Summit. These certainly are challenging times for us, but perhaps they also provide us with an opportunity to pause and reflect on important matters that require our attention. Being in the investment industry for over 20 years, helping clients plan for their future is a topic that's near and dear to my heart as it pertains to their wealth. Financial planning is not only about return on investment, but it's also about planning for the unexpected so that we can achieve our long-term goals. Now, whether it's a downturn in the economy or such as an environment that we're facing today, good financial planning allows you to take advantage of any opportunities and also weather the storms like we're facing today. So while there are many challenges that we're seeing in this environment, there's also some opportunities that we can look at. And that's precisely what we'll be talking about in today's presentation. So the slide here gives you an overview of some of the things that we will talk about. We'll look at quickly the resources and programs that are available to us and to business owners today. Then we'll go into the importance of wealth planning and what that process entails. Next, we'll look at some of the tax strategies that we can consider given the challenging environment that we have today. And finally, we won't have time for a formal Q&A session at the end of the presentation, but we will provide you with contact information of who you can go to help answer any questions, or if you have any other information requirements, we can help you with that. So that being said, let's take a look at the resources that are available to us today. Now, we will be looking just briefly over each of these, and I do encourage you to go to the CGLCC website. There are links there to the Government of Canada website that has more information and detailed on each of these programs. So first is the Canada Emergency Response Benefit. This basically is a $2,000 per month payment to individuals for up to 16 weeks. And the key is really that individuals should not have left their jobs voluntarily and that it was truly an impact due to COVID. That is a qualifying criteria. Moving on to the wage subsidies, there's particularly 2 kinds here. There's the 10% wage subsidy, and this basically is 10% of the remuneration that's paid to CRA. It allows individuals that qualify for the eligible business deduction to take advantage of this, and this basically reduces the payroll remittance to CRA. The Canada Emergency Wage Subsidy is a little bit different. This actually is a benefit that is up to 75% of the remuneration that's paid. There is no overall limit for each employer, but the main test is that their business has suffered at least a 30% reduction in revenues because of COVID from a year ago, and a majority of that impact being in March when all of this started. There's also the rent assistance available, which is the Canada Emergency Commercial Rent Program. And this basically allows small business owners that are affected by COVID to reduce their rent by 75%. And the way that it works is that the program allows forgivable loans to property owners that it covers 50% of their monthly rent payments. And it is eligible like for owners who have tenants that are small business owners and are going through the financial hardship due to COVID. And the other important thing is that for business property owners that take advantage of this, their loan can be forgiven if the owner agrees to reduce the rent by at least 75%. With a rent forgiveness agreement for the tenant, and that they promise not to evict the tenant during that time. So it's a win-win situation for both owners and small business tenants that can take advantage of this. Going on to the next slide, another program that provides additional support is the Business Credit Availability Program. And this is a co-lending program with Business Development Bank of Canada and Export Development Canada. And basically, these two organizations work with financial institutions to provide loans that help with operating credit and also cash flows. So it's something that it is a co-lending program meant to benefit small and medium-sized enterprises. Moving on to the Canada Emergency Business Account. Now, this is a loan of $40,000 that eligible businesses can take advantage of. And it basically is an interest-free loan until December of 2022. And there's no payments required, no monthly payments until that time. And at the end of that term, in say December 2022, what happens is that the loan becomes a 3-year term loan with a interest rate of 5%. And also, if the business owner is able to pay off the loan before December 2022 in full, there can be a loan forgiveness of up to $10,000. So it's something that's quite helpful for business owners. And finally, something recently that's been launched is the Business Resilience Service. And, you're recognizing that not all business owners may have access to accountants or business advisors. So this is a hotline that's been established. And basically, it has 125 members of the Chartered Professional Accountants organization that can provide customized financial guidance to business owners. They can help answer questions on any tax regulations, what the impacts of COVID, any specific government support programs that are best suited for their circumstances. And they can also provide some assistance with financial planning. Which basically takes me into the next section of our presentation, which focuses on wealth planning. Now, it is a tough time with market conditions the way they are. We have 24-hour news coverage about all the doom and gloom that's going on. And without a doubt, it's created a lot of uncertainty for our clients and their families. And for those folks that do have a plan in place, they may already have built in emergency scenarios or a downturn to the business or cash flows or their income, and may already have items or strategies that they would take advantage of in this scenario. But for those that don't have a plan in place, it's never too late to start. And during this time, what is consistent is that every individual should have a plan in place that talks about various scenarios and prepares them for the future to make sure they're going to be on track to attain their goals. And when we're looking at a wealth plan or the various considerations, we basically start with getting to know what's important to you, right? Before you can put any kind of plan in place, you kind of need to understand where you're at today in terms of your wealth, in terms of your business. And what are some of those things that are important to you? What are those goals? What does that vision of the future look like? And if there are going to be, unforeseen circumstances, how will you as an individual and as a business owner, navigate through that time? What is your plans for, basically passing on your business? Is it going to be selling at some point, or is it going to be passing it on to the family? How is that transition going to work, and what kind of tax implications are there for that strategy? So there really is, basically more of a deep dive into where you're at today and what that vision looks like in the future. And a plan basically gives you a roadmap that helps connect the dots of how you're going to achieve that vision. And this can be quite a daunting task, because when we're looking at wealth from various lenses and different angles, you almost can wonder, like, how do I organize myself? And this is precisely what we do at TD. is helping look at wealth from, sort of four different buckets, if you will. First is looking at building your net worth. Then we look at, what are the tax strategies that are in place today and in the future? How do you protect against risks, whether they're market risks, impact of an economic downturn, from a tax perspective, or how is your business structured? How are you going to mitigate those various risks? And then finally, how is that transition of your wealth or your business? What will that look like? And what are some of the strategies that you can take advantage of? So kind of going a little bit deeper into each of these. So we're looking at building net worth. I mean, that pretty much is, what I would say an objective for most people is to build the wealth so that they can enjoy what's important to them in their life and achieve that vision of the future that they see. And this is looking at, what are the saving strategies? What are the credit facilities? How are your investments and your business structure to help you build net worth over the long term? Looking at tax efficient strategies. So again, from an investment standpoint, how are your investments structured that will help you minimize taxes now or in the future? And that also looks at from a business perspective as well, like what does a corporate structure look like that will provide you with tax relief in the future? And we'll look at really this bucket later in the presentation about what are some of those tax strategies that we can take advantage of today because of the COVID environment. And then again, just looking at, how do you protect what matters? So this, is looking at various risks that are available, even from a corporate standpoint, from creditor protection, how is your business structured? In the event of something happening to yourself or to a business partner, how is that risk going to be mitigated? What strategies are in place? So it's very important to look at that. It's not often just economic risk, but other risks that we also need to be mindful of. And then finally, leaving a legacy. Here we're looking at, what does your wills, are they in place? What does the estate plan look like from an individual and corporate standpoint? Do you need any trusts? What is your gifting strategy or philanthropy? How does that fit in? And what we'll do next is specifically look at some of the tax strategies that the current environment, it presents itself with. And before we get into each of them, what I want to focus on is that, the tax, and it's very kind of unique to every individual situation. So what we'll talk about is kind of in general terms, and I would really recommend that you reach out to your tax and legal advisors to see how, if any of these strategies pertain to you and how you'd be able to take advantage of them. Okay, so the first one that we're going to look at basically is, sorry, just give me 1 second. Okay, triggering capital losses. Now, this is a phenomenon that, whenever there is an economic or market downturn, we often take a look at what is that silver lining to the cloud that we have overhanging us. And when we're looking at capital losses, it's basically saying, there is a downturn in the market. Is there a way that I can trigger losses on an investment? And for the last 3 years, I may have paid capital gains tax. And with capital losses, you can actually go back 3 years and retroactively apply the loss to the gain. So it can, result in good refunds for tax that has been paid in previous years to recuperate some of that. And if we didn't want to do that, capital losses can also be carried forward indefinitely. So it's a good opportunity to say, well, it's kind of a crummy time right now, but what can we do from sort of triggering capital losses that will at least benefit us from a tax perspective now or down the road? So it's important. Now, when it comes to corporate investments, it's really important to look at the capital dividend account because it is a ledger entry, and the capital gains and losses can affect how that capital dividend account, what happens to it. So it's really important basically planning the CDA account and how triggering capital gains and losses will affect that. So let's say that if you have a positive balance in the capital dividend account, well, before you trigger any losses, you may want to take out that tax-free dividend, because when you have a positive balance in the CDA account, it allows you to pay out to shareholders a tax-free dividend. So if you have a positive balance, you may consider taking that out first and then triggering the loss, because if you did it the other way around, basically if you have a positive balance and now you create a loss, well, that loss is going to get credited to the CDA, and it kind of wipes out the balance, which now doesn't allow you to take that money out tax-free. So sort of the sequence of those transactions becomes really important. And you know, some people may be thinking, well, it's a downturn right now. We actually need the money in the business, so it's not really a good time to be taking money out because we need it. So in this strategy, you know, even if you do take it, then what you can also do is loan back those funds back to the business as a shareholder loan, which again then can be paid out tax-free at a later stage. So there's options around that. The next strategy that we'll take a look at basically is realizing capital gains. Now, this is something, you know, because the fair market value of the assets may be lower than under normal circumstances, and if you have also an investment portfolio that is showing a loss because the markets have been, you know, under turmoil for a bit, how can we take advantage of that situation? Now, in this case, basically, there may be the ability to recognize the business valuation increase in a way that creates a capital gain. And what this will do is that it adds the tax-free half to the capital dividend account that then can be paid out. Now, if there is you know, an opportunity to pay that balance out, then you need to trigger that gain and pay out the balance before triggering the loss on the investment portfolio side, because again, of how the CDA works, you don't want the loss to wipe out the amount that can be paid out. So it's important to kind of you know, look at the sequence there as well. Now, alternatively, if there is no requirement and all we're really looking to do is to increase the adjusted cost base, then what we can look at is that the value increase can be recognized after the loss is triggered in the portfolio. And in this way, what we've done is we've increased the ACB of the business itself against the losses, which then eventually will reduce the tax when the business is sold or upon death. Now, this does actually involve a corporate restructuring, so it's very important to make sure that you're doing this with a guidance of top flight accounting and legal professionals, and not doing anything you know, without their input, because they will ultimately look at how to structure any changes there. Okay. Now, the next strategy is an estate freeze, and this is something, you know, you may have heard of before as well. It's a common way to basically say, how do we freeze the tax liability for a business owner so that the future growth of the business is passed on to the family or the next generation. And typically how this works is that you do an estate freeze, which basically allows the primary business holder to take on more of a fixed value ownership in the corporation, and then the future growth it basically goes to the heirs or the family members. Now, you know, for those individuals, you know, that may have done an estate freeze already, and now they're thinking, well, you know, the value is actually lower than what the frozen value is, and you know, is there a way to reset that cost base, you know, for the future? So again, there is also an opportunity to do a refreeze, which also does require a corporate reorganization. It's basically to say, you know, we can lower the tax upon death or sale for that primary business owner, even at a lower amount because of what's going on in the economy today, and knowing that when the economy recovers, there will be a growth spurt in the business. So we're basically saying, let's try to defer that growth then to the future by way of doing the estate freeze or a refreeze. So it's definitely gives a tremendous opportunity to plan for the future. Okay. The next thing that we'll look at is purification. Now, this really is a strategy that pertains to the lifetime capital gains exemption for individuals. And, you know, typically what will happen is for business owners, they may have a operating company and they may have a holding company set up. So, you know, as they're moving along, as their business is growing, they're basically able to move a lot of the passive investments to the holding company, and it allows the operating company to remain pure so that the lifetime capital gains exemption is going to be useful when that business is sold. Now, what can happen is that not everyone has the opportunity to set up a holdco. There are certain businesses, like if you look at a dentist practice or an accounting practice or a chiropractic practice, that actually don't have the ability to set up a holding company. So in those situations, typically what happens is that as revenues are coming in, businesses are growing, it allows the accumulation of passive assets in the corporation, and this can interfere with the lifetime capital gains exemption when that business is sold. And typically, some of the rules around that are that it has to be a Canadian controlled corporation, and usually 2 years leading up to the sale, not more than 50% of the assets can be passive. On the day of the sale, not more than 10% of the assets can be passive. So you can see that now, because the value of some of these passive investments might not be as high as during other times, it might be a not bad idea to remove some of those passive investments out of the corporation. Now, you do still pay tax on that, but hopefully it'll be a bit less because of the downturn. And this allows you to sort of clean up the operating company and remove some of those passive assets so that down the road, you're not going to have as many built up at time of sale, or just to keep the operating company pure. So it's a good strategy because you're going to pay taxes ultimately, but now you might be paying a bit less tax than you would otherwise. So it's something to look into for sure. The next strategy is looking at donating. So again, for individuals or for business owners that do a lot of donation or charitable giving through their businesses, there's actually a sort of a double benefit by donating the shares out of your corporation. So if you have investments that have appreciated in value over time, and you're thinking of making a charitable donation, well, a couple of ways to do that. One is you sell your investment and take the cash proceeds and give that to the charity. But actually, from a tax perspective, it's better to donate the shares in kind. And then I'll use an example for this. So if you have a stock that, say, is worth $100,000 now, and the cost base for that, say, is $10,000. So you have a $90,000 unrealized capital gain in this investment. Now, if you take that $100,000 stock and give it to a charity, so they're getting the full donation of the $100,000. You have not sold the security, so there is no capital gain. Now, what that does is that you get the full benefit of the $100,000 donation. But now what's going to happen is that $90,000, the capital gain of $90,000, you're going to be able to put the full amount into that capital dividend account. Okay, because the portion that goes into the CDA is the non-taxable portion. Now, if you had sold that stock and realized the gain, then only $45,000, which is 50% of the gain, which is the non-taxable portion, would have gone into the CDA. But in the scenario where you donated the stock, you're actually not paying any capital gain. So that $90,000 gain, all that balance goes into the CDA, which again, down the road is going to allow you to take out money tax-free as a dividend from the CDA account. So from a donation charitable perspective, again, it's a much, much better strategy from a tax perspective. So that's something to consider. Now, the last thing that I'll touch upon is what is known as the claiming business investment losses. This is something that applies to individuals as well as business owners. So if you have invested in a private company, that is not doing well, and this year it may go belly up because looking due to the impact of COVID on the economy, we're kind of expecting that we might have more business failures this year than we would under other circumstances. And if we look at what some of the main financial institutions have done, is that they have increased their loan loss provisions in anticipation of possible failure. So, if you are an individual or a business owner that has invested in a private company and that company goes belly up this year, well, you have the ability then to claim 50% of that loss against any type of income. Now, that investment could be a loan to that private company, or it could be a share ownership in that private company. But basically, it's going to allow you to take 50% of that loss and apply it to any income. So it's not restricted to just capital gains, for example, that you might have elsewhere. If you have employment income, you have rental income or investment income, you'd be able to take 50% of that and apply it against that. But of course, again, from an audit perspective, you want to make sure that there is proof there that that company did actually go belly up. So you want to make sure you're covered from that perspective. So again, something to consider there if you've made any investments such as that. Now we have covered a lot of information over the last few slides here, and those are some of the strategies which we just wanted to share with you that we can kind of take a look at. It is a lot of information, and we recognize that you may have questions or want more details on those. Now, what I've done here is that we do encourage you to reach out to our team, and I will share the contact details on the next slide. This slide basically just shows you how we're organized at TD Wealth. So here, our business model and our service model is such that we try to work as a team behind the scenes, but from a client perspective, we want to have sort of, a point of contact that can help you navigate the different services and the different products in areas that can help. And basically how we're structured is that there is a relationship manager between you and all of the services and products that are available. And the relationship manager can help quarterback and help coordinate with these other professionals based on your immediate and future needs. So it's something, we try to make it as easy for clients as possible. And specifically for the LGBT community, we do have a business development team that spans across Canada. So these are relationship managers in every part of Canada that we would encourage you to reach out to if you have any specific questions or if there's anything specific that we can help you with at TD. So this is, if we take a look, we have a grant in the Pacific region. Rupert and Marc-Antoine are in the GTA region. We have Martine in Quebec and Eastern Canada, and then Tyler in the Prairie region. And I believe that this session is being recorded, so this information will be available on the playback. So feel free to reach out to us. We're happy and ready to assist you in however way we can. And of course, as a final note, I just want to have a shout out to the CGLCC friends for giving us this opportunity to share some of these strategies with you, because like we talked about, it's a tough time for most people. So we're trying to say, how do we make the most of a bad situation that can perhaps help us down the road? So I hope you found this information informative and helpful. The entire TD team, again, is very proud to be partnering with CGLCC to bring you this digital summit. We also encourage you to take full advantage of the sessions and networking opportunities, and also wishing you a very happy Pride. Thank you, and stay safe.